Welcome everybody, Brian with Zaner Ag Hedge coming at you from Chicago. Before we get started, trading futures and options does involve risk and is not suited for all investors. So as I said, I'm Brian.
I'm Mike Pearson, and this
I'm Dan Hussey.
Is Dan Hussey. And today we are going to be talking about what to expect as we work through this week. We saw a really exciting trading day on Monday, I think we can call it. It was a neck snapper.
A little bit from Monday. But
Still got a little whiplash, don't you?
Oh yeah, a little bit.
Monday was weird, but Monday seemed to have changed some things, or at least it was a continuation of a change, Brian, that you saw happening in advance. Tell us what you were watching on Friday that Monday accelerated.
So anybody that's following or is a subscriber to the Newsletter Plus, they noticed, and anybody that follows it knows that I'm a big follower of what the spreads are doing. So on Friday, we had profit taking going on. But for the first time through all of this, we were seeing the calendar spreads trying to go higher. Then on Monday, we had the big whipsaw action going on. But even when we were lower on Monday, we still had higher calendar spreads. So to me, something was trying to change. And
it was structural.
Yeah, it was something. It was something going on with the commercial, something with the end users. We just probed down below that $4 level. Looking at a percent of carry, we were pushing into that mid 60% range. Everything was, we were hitting all of the resistance levels that you would expect a market to try to pick up from.
Right.
And it appears off of, what we're seeing all the way in through today that it definitely was the commercials that are becoming buyers again.
Now, what makes you think, why would a commercial be buying this time of year?
Well, one of the biggest things right now, I guess actually let's start off with the routine question answer is they have year to, month to month needs. An ethanol plant, a feedlot, whatever, they're going to consume X amount each month. But something that could be stirring them a little bit right now is we have the WASDE report coming up. And with that, USDA could throw out any kind of a number right now. So the commercial longs have had a bit of a decrease in their position. They've taken on a lot of physical corn. So it would not be a surprise to me for them to build up that position a little bit in front of a big report. If we have a big knee-jerk reaction driven by the speculative crowd, they might be able to just sit back, let the specs do what they do, and kind of let the market do its thing.
Dan, when you look at this market, corn market, let's talk corn, talk Nice corn, from a from a technical perspective. What do you see? What are you watching out for?
Well, we've had a nice reversal, at least in terms of a daily structure. Monday's whipsaw price action holding the lows and actually pushing through to new highs into the close was a very constructive intraday move. The issue here is that today we were unable to push through highs again and make new highs for August, which is a big and important kind of internal or technical thing right now because we're at the start of a new month. Seasonality speaking, the start of a new month is oftentimes we will find a high or a low potentially.
Yeah.
And now that we have a very, very, very nice opening range to that month that happened to have been exacerbated by Monday's whipsaw price action. So seeing that the market did try to trade higher today, it settled lower, but that was lower inside yesterday's price action. If it can make it through highs in the overnight, I think that there's definitely of the path of least resistance in the near term should be to the upside. But the big question will be that I think we're all kind of looming over all of our shoulders is where's that commercial selling come back in and use that as a marketing opportunity then.
Right. So one of the conversations we were having back in the month of July was, what do we see first, 412 or 440? Nailed it.
I'm not going to get too excited about being right on that.
No, of course not.
But
you did. You nailed it.
Yeah,
we definitely saw 412
absolutely.
well before we saw 440. Yep. Next question is, we pushed below 412. Are we going to see 380 before we see 440?
So on Thursday, I would have told you, yeah.
Okay.
On Thursday, it really looked like we were going to just blow right on through that 60% of carry, get the market to that 80 that we've really been historically bumped up against and not been able to get through. So I thought 80%, here we come. We're going to go down. We're going to fill that gap below the 380 area. That's going to achieve all kinds of technical objectives. And at that point, we were going to be able to, rally into whatever it may be. Personally, I thought we were going to go sideways and just basically flatten off for the whole week going into the WASD. And then the WASD would be the thing that's going to drive us down. Now, I'm thinking we have a chance that we are going to bounce here going into the WASD. The calendar spreads are going higher. Who's going to be selling against commercial buyers right now? Commercial sellers, are they willing to do it, after we've dropped 60 some cents? Some of them might be, old crop bushels, absolutely. Somebody nervous about getting their loan paid off. That, definitely.
You pointed out those that might be rushing in scared, having not put on a commercial short
this is
interest.
the time. 60 cents scared me to death. Now I got to get some.
Yeah.
And how much of that pressure may be left though?
So I had the conversation with the client earlier of, I don't think we've seen the panic selling yet. That typically a producer waits till the very end, the month.
We're not
of
yet to August 31st.
Yeah,
Right.
true.
Right.
True.
We definitely have a lot of time for that panic selling to come in, but we haven't seen it yet. So if we haven't seen it, does that mean that producers are either at the point that they will not sell based on what they know, or the other thing is, are we a little bit off on our quarterly grain stock number as well? Do we have a little bit less than what we're thinking? If you look at the basis, that's definitely a combination of, is the producer willing to sell? But they've had cases had an 80 over basis.
Right.
How would that not empty out every bushel there is in that area? So I don't know. That could be me going a little bit crazy on it. But yeah, I mean, and basis has softened lately, but
if
we got
are
the
a
history.
savvy basis trader, you're using the board, you're using other tools. So the difference between 80 and $1 over at that point, to me, would be moot. I need to capture this now because a bird in the hands were two in the bush. And I can go and re-own on the board and do other things to capture a future improvement via a spread that you're pointing out. And that's, how a true commercial entity, if you're really going to trade it, how they tell you, in the textbook, that's what you end up doing in this type of market. And you're right. It sucks the bushels out.
Well, and the end user at the end of the day isn't looking to get the lowest price or the highest price or whatever. They're looking to capture an X% profit margin, and that's what they're aiming for the whole time. So whether the price is going up or the price is going down, for them, it's, do they have what we need for right now, and is that achieving our profit margin?
Right. So corn, Dan, thoughts? 380 or 440? What comes first?
440 is a little bit higher than where I kind of see resistance.
What are you looking, mid 330s or 430s?
Yeah, I'm around 425 to 430. I'm just looking at for the next 10 to 15 cents on corn to the upside, and from there, I need to get through this report. And there's still so many unknowns to take us out of it.
I'm going to take the over on that. If this extends to WASD day,
we're cautiously optimistic.
I can tell. I can absolutely tell.
So I'm thinking that we can get to 442 actually. Okay. I think 442 is in the cards on WASD, on a knee-jerk reaction that we're going to see what most likely we're going to see a smaller acreage number. Good potential we're going to see a smaller yield number. I think the algorithms immediately are going to get us up to that 442 ballpark area. And from there, I think commercials are going to sell.
That's the hammer button right there. That's the hammer button.
And to be fair, algorithms took us up to the 460 levels last time.
We had absolutely. So, they were the ones
in a fast market. Let's not underestimate the ability for
fast markets are so much faster now than they were 10 years ago.
Well, and the other thing too, the difference between this time and last time. So the algorithms ran it up. They were watching for, in that case, quarterly grain stock was the event. But now they're more likely going to be focused on what is the acreage number. Right. That is what everybody is talking about. But this is the time of the year where the acreage number, me personally, I don't know about you, but I do not believe the acreage number on August 12th is going to matter. On that day, I think we're going to get that spike. We're going to see the market take off on it, and we're going to see so much pressure come from the commercials that it is just going to overwhelm that number, and we're going to continue that trend lower into our harvest lows, which, it still is going to be, if we're not wrong on quarterly grain stock and give the USDA benefit of the doubt there is still a lot of grain that needs to move. And corn prices are a little bit higher, but bills still need to be paid.
And there's too much that would have to happen at this point to start betting on a $5, December.
Yes. The amount of acreage reduction that would have to happen on the 12th to get us to $5.
Right, or the unforeseen yield reductions that come in the effect of, weather events down the road that we're not gambling on. It's not what we do here.
Right. Virtually anything could, there's always that unknown black swan.
But that's not what we're trading. That's not what we're using as a market.
What do you call that, Dan?
Oh, that's just pure gambling.
That's gambling. Go to the casino, boys. That's how you want to roll.
And at least at the casino, you know what your odds are up front.
Right. And you're going to have a little bit more fun.
Right. Absolutely.
And your drinks on the house.
Drinks.
Right. Yeah, absolutely.
You're not buying your own Busch Light. They'll bring it to you. All right. That's the corn side. Let's talk bean side. We've got a whole month of August left ahead of us. We've got short beans. Brian.
Everything I have been taught in my crop and weed science minor and my experience as a farmer tells me we are going to have an absolutely horrible soybean crop. It is going to be in the 30s, something horrible, which in that case, that
nationwide average.
Yeah. And that might be me being a little farmer Brian there, but, even if we dropped it down to a 42, let's split the middle and take it down to a 42. We have excellent feed demand. Our soy meal largely goes to poultry, which has stellar demand right now.
And then up crush capacity.
And then the next, actually, no, that's a two-part thing. Yeah. And we'll come back to that. Yeah. But the next thing is going to be hogs. They're the next driver of demand.
Yep.
Granted, you look at the hog prices right now, they suck. Well, we're at near record high hog production here in the U.S., and we are still in ultimately a trade war with what could be the game changer for hogs. So, hogs are going to have that volatility, but the animal is still there. We're still feeding the animal.
We're seeing exports continue to climb. We're seeing domestic demand continue to climb on the hog side. We are seeing barns full of pigs that are consuming bean meal. So, are we going to continue to demand it on the pork side? Absolutely, at least as I look ahead into 2020. I mean, we're not going to reduce our herd size anytime soon unless this most recent 10 days in price action.
You have one of the most eye-opening global events happening in your commodity, and you're going to reduce your position.
Right.
So, no, I want to have as much of it because somebody else really needs it.
Absolutely. So I'm not worried about domestic soy meal demand.
Okay.
The biggest problem that we're going to have right now is if we are getting into a currency war with China, it's going to turn into a race to the bottom. The EU's already ahead of us. Japan's well ahead of us. If China's going to keep notching it down, all these other countries are going to follow suit. And unfortunately, the worst stick in the basket right now is us.
Right.
And
by worst stick, you mean strongest valuation.
That's
the irony of an export-based industry, which we are in agriculture. Is strong dollars.
But we are also discounting a little bit the ability of the Fed, who is watching these things and has actually, for the first time almost ever, looked to the outside United States borders to dictate Fed policy. We've never had
But it
a
was-
Fed that has openly
But
said,
it was quickly undone by China,
It
just
was.
days ago.
But I
So-
think you make a great point.
well, it
The
wasn't
Fed is not
totally
just looking for,
undone.
are we in a recession or not? Should we cut rates?
Right.
They're going, okay, we got some concerning issues out here on the horizon. We're willing to cut rates now. We're willing to cut rates again throughout 2019.
Which
And if
still
they
leaves
want
us
to,
in a race
they
to
could
the
always
bottom.
expand
It does.
And,
It does.
and let's not forget, if you really want to get technical about it, when the Fed uses terms like expanding the balance sheet, that is direct Fed intervention in the open markets. That is no different than China directly affecting their currency in a way. So the Fed will do that if they
Yeah.
need to.
Yeah.
Let's not forget.
Let's get into the currency manipulation on a different
But-
one.
Okay. All right. Good call. Good
Bringing
call.
it back to meal and hogs.
Right.
Um,
Thoughts on meal and hogs?
So-
Dan, we've heard Brian. Shush, Brian. Dan, what are your thoughts?
No, bringing it back, I think, yeah, like Brian said, China is the deal breaker or maker in this global hog economy. That, hey, if we can somehow come to terms with China, you better believe that they'll be turning their heads to the U.S. to meet their pork demand because, we all have heard what's gone on with the Asian swine flu, but rumors aside. There's definitely demand out there. You're seeing it in hog prices. You're seeing it in meal demand domestically. And, I hope, and you wanted to come back to, I hope we find a way to increase. And is this a reason to finally increase
So-
U.S. crush capacity?
Yeah,
It's a
are
real
the markets
reason,
there?
right?
Yeah.
So that was a conversation that I was having on the Ag Hedge chatting group, the group on Facebook.
How should people find it, Brian?
You can find it under the handle of Ag Hedge chat group, but go to the page. In the right side near the top, there's going to be a visit the group button. You can take that to the button. You can join it and be part of the conversation there. But what I was saying, take all of our trade stuff aside. Granted, yes, ag export markets in chaos. Something needed to be done with China. Take all of that, and we are where we are.
Right.
The one thing we could be doing right now, and unfortunately we're not, but what we could be doing is expanding ethanol. We could be expanding the domestic crush. Right now, given the potential climate condition of soybeans that we're in right now, we're not that far away from needing all of our soybeans for our own domestic crush. So if we want to take on climate change, if you want to take on, skip climate change and let's just say less pollution in the ocean,
Right.
there are products, there are plastics that are made from soybeans.
Mhm.
So we should be driving this. We should be not only driving it, we should be demanding that if we are going to have this head-on trade war, let's figure out what we're going to do with what we have
It's-
and
We can't
do
keep
it
rolling
here.
with MFP money.
No!
Whenever the president
No,
decrees.
so
we gotta
let's
have
just
demand
produce
here.
more and we have nowhere to
It's
go
a
with
simple
it.
solution to a common problem. There's a demand issue. We need to create our own demand.
Yes.
Simple as that. And there's ways of doing it. Simple as that. And there's now economic basis for doing that.
Okay, and
And
so
we're
then
not just
the
crushing beans for the sake
well,
of
and the next
crushing them.
argument is going to be, well, you're taking
Use
away
it.
from the oil industry. Well, we're all here in Chicago, and I can find you a few roads that need some asphalt. Just a few.
Right.
Just a
Right.
few.
I noticed a few on my bike this morning. Now that I'm a cyclist.
Wait until you find the ones they didn't cover with sheet
But-
iron.
But at
boy.
this point, with where taxes and inflated prices of gasoline have been, I would love to take away from the oil industry.
100%.
Well, I know,
That's
but
a mar-
but
the
but
gasoline
that,
margin-
but that's a political battle
I
that
understand.
ag's
we're
not
fighting
going.
people in North
As a
Dakota. at that
consumer,
point.
yeah, we're
I would
fighting
love
Texas.
cheaper gas prices, and I would love a higher corn price as a broker. So it feels like
Oh.
a win-win for me.
Oh, absolutely,
100%.
absolutely. But let's not take, let's
But,
keep
yeah.
it so that we're not taking anything away from
Right.
anybody.
I
There's
agree.
just
All
room here to
of
grow.
this is ways that we could be spending all of that money here. Right now, I mean, I love the MFP program because it's keeping people alive
It is.
in a situation that
It
they
is.
did nothing to bring on.
I've talked to several bankers
But-
who have clients who only were able to survive
Right.
thanks to the
Right.
MFP.
Right. And it's unfortunate because I don't think the outlook for next
But
year
it's a
is
Band-Aid.
right.
to a
It's
bigger
a
problem.
Band-Aid for a situation you need stitches.
Right. Good point.
But
Yeah.
I don't know if we want to get too overly political.
Well, I was thinking
No.
30 minutes into it.
No,
Yeah.
but at the end of the day, it's
30 minutes into it.
Yeah, or 25.
Okay.
Do you have any thoughts, livestock markets? We've talked hogs. Anything on cattle that's jumping out at you? We continue to see huge kills, huge summer kills of 645, 650,000 head. We're seeing cattle up north commanding quite a premium to the board. Brian, thoughts?
So
We gotta pull,
we,
live cattle higher, right? At some point?
No, we don't. We
Why not?
absolutely don't. So this year's weather fiasco, the best thing or the best correlation I think we can make to all of the problems we had this spring, we've learned that our grain producers can crank out a crop in horrible conditions. We're discovering that our animal producers can do the same thing.
That's true.
We're counting on this horrible spring to, bring down weights, and we're also counting on actually having summer show up and, a little bit of grilling demand. But, the biggest thing is the weights didn't come down like we were expecting, and we didn't get that grilling season. So now, our hopes got killed with our fears showing up in our face.
Right. Good point. Dan, any thoughts on the cattle market? I know you've been working with clients who have been
failure
active in the cattle.
breaking out of some technical levels, get above that 110 figure in the October, 120 in the April, look further out, and keeping a futures market otherwise locked in a range, in a big daily range. And until we get through those, basically a 3-month high that's formed in the market there, we're just price discovery should keep us sideways. And like Brian said, we're obviously learning that fundamentally speaking, the market might not have had a reason to rise.
The critters are still there,
right
now, and they're still getting
That's just
fed corn. Yeah.
The producers went out and they took on the worst of conditions, and they kept their animals alive.
They did,
And
and
it's very good at what we do.
that's the thing. That's the thing with American agriculture. That is the biggest double-edged sword we have.
Oh, absolutely. American producer will always prevail.
Right.
Whether they can prevail through low prices is the question, but the producer will prevail.
Yeah. Can you prevail against your lender? That's what it comes down to.
Oh, absolutely.
To shameless
Absolutely.
plug for marketing plans.
Absolutely. They are.
It is. Absolutely. Speaking of marketing plans, gentlemen, before we go, we have a very exciting event coming up on Thursday.
We do. Yes.
Want to make sure we get this out there, folks. Dan, Brian, and
Practicing
Ted
our
Seifert.
weatherman
Whatever.
skills.
I was looking at the cameras. It was all backwards. And Ted Seifert and myself will all be doing a webinar Thursday at 3:30 Central Time. We'll be talking about what to expect with the USDA's reporting events on Monday. We've got WASDE, we've got resurveyed acres. What do you need to do to get prepared? What do you need to do to get positioned? Just log on to zaner.com, head to the education tab, and there will be a link right in there to go to the webinar. And if it's not up there quite yet, it will be very, very shortly.
And
I think it's being added right now.
and you'll be able to find it on my page. So just go to the Ag Hedging Brian Facebook page, and you'll be able to find it. I have shared it
Following any of
multiple
us.
times,
If
so
you don't find it, it would be shocking.
Right. Right. So, Brian, how can they follow you on Facebook and on Twitter?
You can find me under the handle of Ag Hedge Brian on both of them. AG Hedge Brian.
Dan.
At Daniel Hussey Jr. on Twitter, or find me at Dan Hussey in the Ag Hedge group.
Fantastic. I am Pearson Cattle on Twitter. You can also find me at Mike Pearson in the Ag Hedge group. So be sure to check that out, folks. Get registered. We'd love to see you on Thursday. We talk about these things in a little more detail and have a little more structure. It'll be professional. We'll put our ties on.
No,
we'll get him in a-
We're gonna get Brian in his tux.
Yeah, that's not happening.
All right.
So until next time, see ya from the Zaner office. Later.
Bye.
Yeah. Let's go get one of them more silver candies.
There's only 2 left.
Well, 2 for us.
All right.
One for me and one for you, because Boss Man's being late.